Let me take you to what a lot of investors are concerned about is around cash burn, and have you got enough capital in the bank to execute, over the next, let's say, 36 months, receive these new planes? Have you got a safety net? Can you just tell us around, how you've positioned the cash side of the business?
We were very fortunate in the sense that we were able to fund the deposits that we paid for the 787s. And normally, you do not get banks actually agreeing to fund deposits because you pay the deposit 2 years in advance. And banks talk about guarantees, securities, and so on. So a PDP, you're paying money out before the asset has been manufactured. But because of the negotiations with Africa Exim Bank, Afri-Exim Bank, we were able to actually fund the PDPs. So that has taken out a lot of pressure from a cash flow perspective. At the same time, you recall we did a rights issue. The rights issue raised $175 million, which was meant for the PDPs. So we do have quite a bit of cash in the bank, which is a good buffer. The other thing is in aviation, you can acquire aeroplanes either through a direct purchase, in which case you have to pay all these expensive PDPs, or you can do operating leases. Now, we are thinking through as management and as a board on how we can actually sell and lease back some of these Dreamliners to also generate a bit more cash into the business. We also talked about other key initiatives. We are setting up an oil company that will, out of the 41 billion, will bring back into the business the margin that the oil companies are making. We are putting up a hotel. We pay 1 billion shillings a year to the hotels in Nairobi. So if that money circulates back into Kenya Airways, that obviously will help our cash. And we have no shortage of financial institutions who are calling us every day, giving us. Just this morning, somebody told me they have an $80 million unsecured facility that they would like to discuss with us. So the funding is not an issue for us at all. We believe we have now put the right processes in place. We believe that of course, there's also an opportunity to continue cutting costs, but we believe we have achieved quite a significant improvement in that area. So really, we're now just poised for the passenger numbers to continue to increase, and we want to be there to take advantage of the windfall that's going to happen in aviation in this part of the world.
Wow, that's confident talk, Alex. Yeah. Alex, just a couple of other points. I mean, obviously, because of the aged fleet, we've had challenges in the passenger experience, something we can't avoid, and obviously it's going to change dramatically once the new planes come in. Do you feel comfortable, because the brand is an African brand, do you feel comfortable about the brand equity, about where the brand is positioned?
I recall that when we opened our new destination to Kisangani about 2-3 years ago, we were very concerned because due to some issues, we were not able to organize the reception in Kisangani. And so we didn't know what to do. But when we landed there, we found a group of people from the DRC, from the area, had actually organized a party themselves because they were saying, finally, our airline has landed. So we are the biggest in Africa in terms of destination count at 44. The second closest to us is at 30. Because we are African and we are unashamedly African. South Africans Airways has issues whether or not they're African or not. We have similar issues with Ethiopians and Egyptians and so on. We are Africans and we are proud to be Africans. And people tell us, Nigerians tell us when they're coming back to Africa from London and they see Kenya Airways, they start feeling at home already in London. So yes, we have a very powerful brand, and we will continue to sell it. And as you know, we are listed in Nairobi, in Dar es Salaam, and in Kampala. So we are not just a Kenyan company, and we would like to list into more African countries so that the Africans see us as their pride and as the African airline, not necessarily a Kenyan airline. As a matter of fact, only 20% of our passengers are from Kenya.
Is that right?
The bulk of them are from Africa. So there you go.
Now, we've got to talk about competition. Obviously, you know, there are a lot more airlines flying into Nairobi, picking up. You've got the Middle Eastern competition. You've got the increased competition from next door. We've had this, a lot of people look at the low budget business. It seems to me it looks better in a business plan sometimes, given the asymmetry of the African continent. Would you characterize the competitor landscape for us, and how do you see Kenya Airways navigating through that?
As I mentioned earlier, last year the total aviation passenger numbers in Africa was 20 million. In China Southern alone, which is one airline in China, carried 120 million people. We think that the number of passengers, annual number of passengers, will grow to the levels of 60, 70 million in the next 4 or 5 years. So there is a massive cake.
Yes.
And therefore, we understand that because there are other companies in this industry, they will obviously want to come and take advantage of this big cake that is Africa. But as I said earlier, given our position in Nairobi, given our geographical advantage, geography is very big in aviation, because if you want to link Australia, South America to Africa, you want to be in South Africa. If you want to link Europe to Asia, you want to be in Turkey. So where you are is very, very crucial geographically in terms of who you attract. And being in Nairobi is huge. So we see that as a differentiator and a big competitive advantage. Ethiopia is very close to us, but they're 2,000 feet above sea level, higher than us. That translates into a 10% additional fuel burn and a 15% reduction in maximum takeoff weight. So we do have that natural advantage. We also have Mombasa, which is at sea level, which makes things even better. And we are looking at making Mombasa our second hub. So so yes, we'll always have competition. And as I explained to you the other day, when you come from the Gulf, for example, you have to use a wide body to come into Africa because of the distance. A lot of the destinations in Central Africa, where we go, if you land a wide body there, it doesn't make economic sense because you will not be able to fill it. But we can take an Embraer, fill it, bring the people to Nairobi, and then put them on wide bodies to go to Asia. However, there are destinations that the wide body can be able to fill, like for example, Johannesburg, Nairobi, Accra, Lagos. So those sorts of places, we know that, and we expect competition from the Gulf carriers particularly. But the bulk of our business is inland Africa, where an Embraer will go there 3, 4, 5 times a week. It doesn't make sense to take a wide body, come to Nairobi, and with the additional capacity from the Etihads of this world, the China Southerns of this world, we see ourselves having taking a larger portion of this expanded business in this part of the world.
Final question, Alex. 36 years we celebrated Kenya Airways. We've been around a long time, right? Lots of embedded intelligence in the organization, lots of understanding of what's a very difficult to understand market. Speaking to your shareholders now, it's been quite a tough 2 years, right? As you optimize the business. Just give them a view going forward. I mean, you've painted a very confident picture. Is this the time to be buying your shares, Alex?
The PE, the earnings per share at the moment is obviously negative. The PE ratio is very, very low. At levels of 2 to 3 PEs, it's very, very low. The average PE ratio in the Nairobi Stock Exchange is 10. We are below 2 at the moment. Aviation industry, the PE ratios go anywhere between 5, and some airlines go all the way up to 20. If you look at the net book value of Kenya Airways share, it's in the region of 30 shillings a share, trading at 10 shillings. So from an investor, this is really, really, really an attractive buy. For the existing shareholders, I would, obviously everybody makes their own decision on what to invest and what not to invest. But in my opinion, this is still a good stock. And we obviously committed because the reason why we work is we work on behalf of the shareholders. We are committed to continuing to turn around the company and to continue to fly the Pride of Africa and to continue to keep the brand flying as a Pride of Africa.
Thank you, Alex. Thank you very kindly. Thank you.
Thank you very much. Yes.